All right, y'all, back to war. Boy, choppy, messy day today. That's all good, though. We got two clues, the charts right now, that tell us tomorrow we might get a rug pull tomorrow morning. Now, rug pulls can be scary. They can be a bit chaotic. So to make sure we are both mentally and technically ready to capitalize, make a killing on that rug pull tomorrow morning. So enough of the intro. Charts are ready. As always, thanks for tuning in and watch tonight's video. Let's dive in and get ready for Thursday morning. S&P SPY, ready to go tonight. NASDAQ triple Qs are always ready. I have 5 clues on the charts right now that are telling us where the money's made tomorrow. 2 of those clues are right here on these hourly time frames. First clue, we are definitely overall bullish on the hourly time frame right now. I like to use the hourly chart as an overall directional filter. The buyers have all the control of momentum. That's one clue. Second clue, look where we are right now. This is one of 2 clues that are tipping us off that a rug pull may be coming for tomorrow. We're way high up right now. Very difficult to attract buyers in this area. Those are our 2 clues on the hourly time frame. I've got 3 more clues though, one of which very important for a rug pull tomorrow. I've got 3 more clues on some faster time frames, some tick charts. We'll grab those in a moment. Before we do that though, let's check schedule for tomorrow. There's 2 things on my mind for tomorrow. First things first is ECB tomorrow morning. They're probably going to cut rates in Europe tomorrow morning, so be aware of that if you're trading the pre-market. 7:45 to 8 o'clock Eastern time. Be ready for that tomorrow morning, trading in the pre-market. Second thing on my mind for tomorrow is we got international trade tomorrow, 8:30 Eastern time. We don't usually watch these, but we know that tariffs and trade, of course, are on our radar right now. Watching that closely tomorrow morning as well. And speaking of trade, speaking of tariffs, we know that's definitely something that's ongoing right now. We'll keep our eyes and ears open tomorrow morning for updates out of the White House. So be aware of the ECB announcement tomorrow morning from the open. And we'll see what that international trade number comes out 8:30 Eastern time. And hopefully get some more updates regarding trade talks. Let's get back to our chart. So I mentioned 3 more clues. One of the big clues here, we're right up around major highs right now. That's always where rug pulls seem to happen. But there's more important clues right now down on some tick charts. I love to use the hourly time frame for direction, bigger picture, but the tick charts are where the money is made. This, by the way, is a 7,000 tick chart. All the time frames there, upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That is the only indicator we need to make money. It is the 21 EMA. There are 3 more clues here on the tick charts. One clue right now, we're bullish into a trading range. Now you could say this is more of a spike in channel, bullish up into a channel. That's a very big clue. Why? Why is a spike in channel a big clue? Because we know the base of that channel is where buyers are waiting. We know that level, that 68 level here on the S&P and SPY, that's definitely a level we want to watch for tomorrow. Second clue here on the tick charts, we still have that big range down there. And like I mentioned last night, anytime we see a break out of a trading range, oh boy, we know that area right there is begging for a breakout pullback. That breakout pullback zone, that's definitely a rug pull zone for us tomorrow at 55.5. And the final clue for tomorrow, and one of the biggest clues I think here, is what we call 3 pushes or 3 drives. Look closely. Strong move up. Now watch closely here. 1 leg, new high. 2 pushes, new high. 3 pushes, new high. The buyers are throwing everything they have at this right now. 1, 2, 3 pushes. We see this all the time on all kinds of time frames. The 3 push rule. Eventually, this rug will get pulled up underneath us here. I want to make sure we're ready for this here for tomorrow. You'll notice though, I got 2 levels right now. My spike and channel level and my dream level, the rug pull level down around that 55.5 level. We can easily buy bear traps on both of these levels. They're both very attractive right now, but you'll notice though, one of them is a lot higher up than the other. So depending on where I can get the most amount of reward, that will tell me now how to structure the entry. So different entries tactics will be used to buy the 68. different entry tactics used to buy the 55.5. So we'll talk about that tonight. We'll talk about different areas, how to structure the entry around those areas. And of course, later on in the video tonight, we'll talk about if we go higher here. If we go higher here, there's 3 different types of trades I'm going to look for as we go higher. Got to be careful going higher because we're right up around those recent highs there. So you don't want to miss the ending of this video tonight because we'll talk about those 3 trades going higher here. First things first though, if we get the rug pull, remember rug pulls can be really scary. I would love to have this kind of run up and then rug pull down tomorrow. If I can get that rug pull going lower, get into that breakout pullback zone, I would love to use a simple bear trap pattern, right? Basically let the bears try once, let them try twice, trap those bears in and squeeze those stops running back up to retest those highs. And remember, if I start seeing this thing separate away from that moving average, if that pullback is too shallow and separates off that moving average, higher high in price, I could begin to add to my winner. This is a typical kind of classic bear trap. Again, target me back up to retest the high. Breakout pullback zone, rug pull zone. It's a bear trap, and then watch for that separation and that add-on. Love that trade for tomorrow. We may not get it though. We may only get below that spike and channel zone right there. Now, why is this one different? Well, because we're buying relatively high in this scenario. If all we get is a spike and channel pullback area, now we make a very small adjustment because again, we're not buying as low as we'd like to be. Let them try once, go higher, let them try twice. I'm trying to get in below a prior swing. That's the one big difference, right? If I run lower, bears once, bears twice, I can take a small amount of risk for a nice big amount of reward. I can be a lot more aggressive on that entry. If all we see is a shallow pullback below the 68 level, now it's got to be bears once, bears twice. But now again, I want to see that higher high. I want to see just below that low. And like I teach in the free video course, I'm going to see a strong green candle closing above that moving average, and we're in going higher. Now, as we do rotate higher, I always like to add to my winner here. And again, same idea, right? Separation, higher high, and we add to that winner. In a trade like this though, it will not only be the targets back to that high, but definitely that 6,008 level. We'll take a look at this, of course, NASDAQ as well. Now, those are my dream scenarios for tomorrow, right? The breakout pullback zone, the spike and channel zone. Let's talk about a couple variations of this. And then as we go deeper, we'll cover this move going higher. Because again, there's 3 different trades I'm looking for as we go higher right now. You know, for example, I love the idea of the bear trap down there. But we may not get it, right? We may run down, and we've all been waiting so long for a pullback right now. There might be so many buyers down here, it may just whoop and run right back up again, right? So we may not get the entry we want down there. If we get a V bottom off that low, remember, make a small adjustment now and start looking for basically 2 things. One is a channel off the high, off the low. Okay, that will give us the new channel. The second thing is buy right under those prior swings. If you understand the idea of why a shallow pullback, I want to buy under a prior swing. If you understand why that's important, then it makes sense, right? If we bounce hard off of that low and go higher, I don't want to buy high. I want to buy low. I want to do it right below that low. That's one variation of that rug pull I'm watching for tomorrow. I have another variation I want to go over you guys right now as well. Before we do that though, let's slow down for a second, because if you're watching for the first time right now, this might be way over your head. A brand new strategy, a brand new language. I understand. I look at things a bit differently here on these YouTube videos, but not to worry though. I teach this entire roadmap, the entire strategy in my free video course. In fact, I have a ton of examples, bear traps, add-ons, spiking channels, rug pulls. Guys, the markets are way too good right now not to be making consistent profits. What I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there. And take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each morning. You're going to laugh when you see how simple it is. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, make a lot more consistent profits. Guys, bottom line, if you're missing the best entries right now, if you've lost your confidence in your current strategy, hit that link that popped up right there. Take that free trading course. Everyone loves all the trade examples I include. I have a ton of trade examples of all the patterns I'm showing you guys here tonight. Ton of trade examples included in that short video series. So hit the link up top there. Best part is it's completely free for you. And keep in mind too, guys, I'm going to put all the important links you'll need to learn the roadmap, time better entries, get your confidence and your P&L back in the green again. Most folks start making money all on their own, all from that free video course. So start there first. I'm going to put all the important links you need down below the video tonight, in the description of the video. Oh yes, don't forget too, if you're on Twitter or X, I post a ton of charts and videos and mindset stuff on Twitter X during the day. If you're on the X platform, give me a follow. Again, all the details you'll need to learn the entire thing, hopefully earn a lot more because of it. I'll link to the description of this video. All right, where did we leave off right now? We talked about that V bottom, right? That V bottom variation off of that low. We talked about that shallow pullback, that trap right there. I will talk about this run going higher with 3 more trades going higher here, but let's cover one more variation right now. If we get a rug pull tomorrow, we oftentimes see a nice strong rug pull going lower. Look at the bear trap, bears once, bears twice. And anytime we have a trading range like this, the underbelly of that range, it oftentimes holds for a breakout pullback, right? The reason why the breakout pullback works here is the same reason why we'll use the underbelly of that range as a target going higher. The bottom line though is every once in a while, we get a retest trade. A retest trade is my favorite trades in our trade room. Every once in a while, we'll get that nice 2-try bear trap, get that first profit target, get that stop moved up to point of entry. I always use the range for a profit target in these scenarios. Every once in a while though, we'll see another leg going lower. Now it's very important that we understand that whenever we have a breakout leg, the breakout leg creates a measuring leg. And then once we know how big that pullback is, then we can find the measured move. So think about A, B, C, D going lower. The most important thing is that once we get back to retest that low, and we know what that A, B, C, D will look like, that gives us now our bear trap zone, our money zone, as we call it in our trade room. So again, most of the time, we're gonna run up and keep on rolling back into that range. But every once in a while though, we'll see one more leg going lower. Now this is where mindset is very important, because if you're anything like me, that voice in your head is gonna say, whoa, this feels like a reversal. But don't forget the hourly time frame. We need a lot more than that, a lot more than one more leg lower for this to be a legit reversal on the higher time frame. It may feel very bearish on the faster time frame, but again, lean on that hourly time frame and follow that direction at all times. These retest trades are easy. It's another bite at the apple. As we pull back now, can we all agree this is a horrible place to be selling? You're selling low at support around that measured move in an overall bull market. So bad spot to be a seller, great place for a bear trap. Bears try once, bears try twice. Remember, always higher high, always a higher high. That way, I know where their stops are. That way, I know where their pain is, and I can buy right into those stop losses. Now remember, when you find yourself in the green on these bear traps, don't just get lazy and kick back and watch that P&L stack up. Put those contracts back to work for you. Keep the foot on the gas pedal and add to that winner. The easiest way to make a lot more money in trading is to add to your winners. So whenever I find a retest trade, rundown, retest, these are very common in a rug pull scenario because that initial leg lower can be very strong in a rug pull scenario. If they retest that low, trap those bears in. And again, please add to your winners, especially in a situation where that range overhead is going to act as a magnet. I have a ton of examples of retest trades in that free video course I mentioned earlier. So those are some variations of that rug pull. Now you know a shallow pullback entry tactic, a deeper pullback entry tactic, why they're important, the difference there, and some variations as we go. Now, let's now talk about as we go higher here, right? Because in all reality, they have not reached that high yet. We may keep on grinding higher here until they punch their ticket up at that 6,008. Let's now move this now over the NASDAQ right now. NASDAQ's getting a bit lonely over here. I see you, Nasty. Let's keep going over now on the NASDAQ. And again, we know we're very bullish right now. There's no doubt about that. But we're hanging out right around those big highs here. We'll dive into the tick charts here in just a moment. In the meantime, though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button for me and make sure you subscribe and hit that notification bell. I know we're all busy people these days. I know time is tight these days. I appreciate you all tuning in and watching my videos. So thank you so much for the likes, the shares, these videos, all the subs, all the ongoing support. I feel the love in the comment section below. Thank you guys for watching, tuning in right now. Now let's dive in and talk more on the NASDAQ. Over on the tick charts, again, I can't emphasize enough, the hourly time frame is great. Time charts are good in the bigger picture, but tick charts, they make entry patterns, entry timing so much easier. And look at this chart right now. It's messy right now, but it's a beautiful chart if you know what you're looking for right now, right? So first of all, we pop up into a spike in channel. We see these all the time, right? Spike up, channeling going higher, and we know that in these cases, it's always going to be the base of that channel. So spike in channel zone right now, what's that, 21,635 or so, right? That's that shallow pullback with that trap, right? With that technical trap, like I teach in the video course, getting in underneath that low. My favorite spot though, and we talked about this last night as well, my favorite spot though is that range right there. If there's one thing you learn from me, I hope it is how great breakout pullbacks are. Breakout, pullback, breakout, and pull back. That's the rug pull zone, right? That's the money zone down there as far as I'm concerned, that 215, 75 and 3/4. And again, I hope that makes sense when I say if we get a strong pullback, it's going to feel very scary. That's why mentally I'll make sure we're ready tonight. But again, these are the best ones because now I can trap those bears in. I can take a small amount of risk for a much bigger reward on this, right? That's why I can be a lot more aggressive with kind of a regular two-try bear trap as opposed to being a little more specific, a little more patient, a little more cautious on the entry right there. Very important to understand that basic fundamental of risk reward, right? How does risk compare to reward here? Now, if we keep lazily going higher right now, right? If we keep lazily going higher right now, look what happened back this morning. We're buying below prior swing. If we keep kind of lazily going higher here right now, everyone now will shift their focus about getting in below prior swings, below prior swings, below prior swings, right? Makes sense? I want to pull back, trap those bears in, and back up to retest the high. I also love the idea of the rug pull, right? The rug pull, bears once, twice, and back up. The other variation of this though is if we see some separation. If we break out going higher and we start seeing separation, separation is the key to knowing now we have a significant breakout going higher. And again, when I say separation, look how the price is holding around the 21 EMA. This is why I only use the 21 EMA. I don't want to have a bunch of different voices in my head while I'm trading. If we start seeing separation, in other words, the pullbacks are not pulling back to that moving average, what happens now is this range right here now becomes ripe for a breakout pullback. So the scenario we want to look for tomorrow is as we go higher here, do we pop up and begin to separate off that moving average? That tells me now that nice deep pullback, use that range now for a breakout pullback. And again, when I say breakout pullback, it's always the same entry tactics, right? Wait for the pullback, Start looking for these areas. What was resistance becomes support. This will feel very bearish, and my goal is bear trap once, twice, higher high in price. Now, on this one, I don't need to be below that low. I don't need to be underneath that low. Why? What's different? On this one now, we have separation. Okay, it's a very small but very important detail, right? Right now, we don't have separation right now. So therefore, as we go lower, I've really got to be careful here buying underneath prior swings, right? And looking for what we call technical bear traps. You'll learn this in the free video course. But if we start seeing some separation, right? If we start seeing this thing separate, momentum now is very strong now. And now all that momentum now is going to want to go back up and retest the high. And again, we pop up, we separate off that high, lots of strong momentum. Now I know when I pull back to that channel or that range now we know the bullseye is right back to retest the high. All we do is do it again, right? Bears once, higher high, bears twice. If we get under that low, great, right? But we don't need that one in this one, right? Trap those bears in, squeeze those stops, and we're riding the sucker back up to retest that high once again. And remember, don't skip the add-on. Don't skip the add-on. Adding to my winners completely transformed my career a couple of years ago, right? So bear trap, add-on, back to retest that high. Another thing I want to keep in mind too is we have some news tomorrow morning. What if this thing was a spike up here into a trading range? That would really be the dream come true scenario if we go higher here, because if we spike up into a trading range now, that range acts like a magnet. That range is now the breakout pullback. Now, what do we know about ranges? We know that they like to rotate with symmetry, right? Rotation, back and forth. The amount below, the amount above, the amount above, the amount below. We like to use triangles, expanding triangles. Ranges like to rotate up and down, again, using symmetry above that range. So if we're lucky tomorrow, we'll get a pop up in a range here. Then we can do is, and this is why it's my favorite stuff, because now, as we pull back right now, that range wants to rotate all the way back up again, not just retest the high. So now the 21 EMA comes down. Now the bears try once, try twice. Same bear trap, same add-on as we go higher here, same everything. But the one difference though now is now it's not just to retest the high. Now it's the amount below the range, the amount above the range. Now we take some profit off at the high, but we leave that runner all the way to that range. We call those pendulum swings in our free video course. Makes sense, right? So again, do we lazily keep going? If we lazily keep going, get underneath prior swings. Very important because we don't have momentum, that strength with separation. Do we separate off that moving average? If we separate, lots of strength, breakout, bear trap, pullback, retest the high. Or my favorite for tomorrow, we pop up into a trading range. Now we can be a lot more aggressive because that range becomes a magnet. We pull back. We use the trading range for a breakout pullback. We bear trap them in and rip that sucker again. The amount below, the amount above, leave that runner to cash that big paycheck. That's the game plan if we don't get that rug pull for tomorrow, because we're seeing signs of right now, but I have no crystal ball for tomorrow. I want to make sure we are both mentally and technically ready no matter what the market throws at us on Thursday morning. Now, speaking of Thursday morning, the place to be is in our trade room, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is come out and learn and trade along with us every morning at the opening bell. As always, I'll put all the important links you need to learn the strategy, get your confidence back, get your P&L back on track, and don't forget, start first with the free video course. Enjoy all the trade examples I include in the free video course. Then come join us in the trade room and we'll trade this stuff together. In the meantime, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow morning. And hopefully I'll see you sometime soon. Trade with us, 8 o'clock Eastern time in the morning room. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.